Hey there, it's Will. I'm going to go through the markets again. I'm going to focus this time on some of the inverse ETFs that I have right now, and you can check that out. So if you've been following my videos, you know that I've been talking about this downtrend for a while. So in the VIX here, it's actually the opposite, where you have this increasing VIX futures, and you could potentially get this, purchase this. But you can see here where we crossed, and then the momentum's been increasing, and now we're crossing at zero with the moving average of the price percent oscillator, which is like MACD. But the zero line is usually right at the time when you cross the 50, so a couple days ago. But you can see these green volatility stops, which take into account the average true range. And you can adjust the average true range up here, or the factor 1.25, so it's fairly tight. You can increase that. If you want to get TC2000 and get all these indicators and drawing palette and stuff like that, check out the link in the description below. You can get a free trial or $25 off your purchase. Thanks to everybody who's already picked this up. I use it quite a bit all day, every day, on the weekends as well, planning my trades and stuff like that. And this is the setup that I have. I mostly use the price percent oscillator and obviously the price action with the moving averages and the trend lines, but stochastics, is kind of an oversold aspect. It's not definitive. Like as soon as you get up here, it doesn't turn around, but there's an oversold, overbought type thing. And then also down here is relative strength versus the NASDAQ. So you can see when we're crossing up, ideally with an uptrending moving average, that means we're doing better than the NASDAQ. So you can see that we've definitely crossed up over here, and we have an upslope. But if we look at the NASDAQ, the moving averages, you can see, hopefully it's fairly obvious when you have a downtrend. You can see here we crossed down. We curled around here, and then so one thing you can do if you want to be more conservative, if you're doing daily charts, is don't buy when it hasn't crossed the moving average, or wait for the moving average to be moving upwards, uptrending, or also you could just wait till it gets above zero, like right around here, when the moving averages crosses zero, and stay away from the lower momentum areas. But sometimes it gets really far down, and then you get a nice bounce if you decide to get in. But this is kind of how I set up my charts with you can turn off with this show, you can turn off the lines and all that stuff. And you can see sometimes, it's never going to work perfectly. If say you decide to get in when it turns green here, you have a stop at the volatility stop. So sometimes you're going to lose. It's not 100%. It's just a probability of trading. It's not 100%, but there are things that you could wait for to be more conservative. Like here you had a cross of the 50, pulls back and retests it. And then once it's supported with a big kicker signal. So also you should know candlestick trading signals. So kicker is when you have a down candle, then an up candle that have, that basically meet or have a gap at the tops here. And that would have been an excellent point. And you also have this uptrending momentum. But right here, it was the first cross of the 50 with a still downward sloping 21. I mean, when you have a break of a downtrend here, you want to see higher lows established. So like this, you have this higher lows. Here you just had this first initial cross and then it just pulled back. That would have been a good spot once you see this gap down, is to get in on a short situation. So right now we're continuing this, but of course, as we get lower, the chance of a rebound gets higher, over time. But all the charts are looking pretty similar. You have this downtrend. It's getting fairly steep now. So that's when you're going to see potentially a reversal. There's no way, I would get in this situation. S&P 500, very similar. Dow Jones, similar. So they're all looking really bad. So for there I usually go in my videos to various sectors. In the morning, it's early in the morning, and these things are really low volume, some of these things, so you can't really judge anything based on that. So what you can do is turn off the pre-market. But what I'll do is like sort by 5-day, try to see what's trending a little bit here. You had some increases with this Latin America and Brazil fund, but it's fairly flat right here, but it looked like it potentially could come back. 50-day moving average is moving up again. But this time I want to talk about the inverse ETF. So I've got a couple of watch lists. So that's another nice thing with TC2000 is that you can create watch lists. So I've created a bunch of, I put a bunch of inverse ETFs that are Canadian and US into a watch list. I've got another one over here on another tab called leveraged, which is 2 or 3x. And that's more obviously risky in that. But once you get comfortable with inverses or trading in general, you could potentially move into some of the leveraged fund, ETFs. But the main, some people use the indices as just a guideline. Like if you're going down, then you go and you short stocks. You don't have to necessarily trade the indices, but you can also trade various sectors as well. But the main indices that you inverse are RWM for IWM. This is in the US. You can see it's kind of going vertical here, parabolic. So, I'm not too comfortable for people getting in at this point. When you start to get a little bit vertical here. But you have PSQ, which is the NASDAQ short. You have SH for S&P 500. And you have DOG for Dow Jones. So what you do is you look back, if you didn't get in right now, is you can look back and say, where should I have gotten in? And you can see the cross here would be the best spot. Then you could, if you got out when it pulled back, this is a bearish engulfing candle right here. So you could get out the next day when you see this down candle and also a red volatility stop. You're still above the 8 EMA, which people call the T line. But then another candle here, and then at that point you could see, well, you're at the 50, is it going to bounce? It actually broke through the 50 and bounced right back. But so you can get back in again, so if you got out with this bearish engulfing or this red volatility stop, and then you start to see this candle sometime during the day with a big gap up here, you could get in. And now you see, so this signal here, it's kind of like a doji gap up here. This is a major reversal in sentiment, and so that's, even if you didn't get in there, you've got this uptrend. You can use volatility stops as your stop. Some people might use the low, which is further away, but like if you look here, you didn't really cross the momentum, the moving average. You just had a pullback here. So if you're patient and you want to wait for a longer period of time, you can get a crossover, and of course you might lose a lot more money if it got down to this area, but you didn't actually cross. So there are sectors you can get into. Bitcoin ETF inverse BIDI. Obviously, it's going to go up and down more than the indices are, but it's right at a 19,000-ish or high 18,000s, which has been a support level. So you might want to wait till you break that level. So if you have this high right here, you see how, I'll turn on the lines again, but I've got this line. And you might want to see a break. Some people do breakouts, and that, or if you look at the Bitcoin chart, basically breaking around, 18-ish or somewhere in that range, might be an entry point, but it's been staying fairly stable there. But I think, it's probably going to roll over at some point, in the future, near future. But you could get into banks, shorting financials individually. There's also, in Canada, an inverse cannabis ETF. The volume's not great on that one, but so there are things that you can, in the ARC into ETF. So if you miss this parabolic thing and you don't want to get in at this point, you can see here how it's supported at the 200, and you might want to get in right around here when it got above the 80 MA. So there are potential, and I'll get into other sectors with the leveraged ETFs, but another thing you can look at is the volatility index, which obviously I showed you was a VIXI. In Canada, that's HUV.TO. You can see this increase in the, increasing slope here. So yeah, again, if you like TC2000, check out the link in the description below. You can pick up a free trial or $25 off your purchase. Yeah, I've got the VIXI here, so I just put it in there so that you could, when things are going down, you know, the VIXI usually goes up. That's why I put it in here. But also, currency and bond yields are going up as well. Like, so for example, the US dollar index is going up quite a bit here. So you can look back, I put a line a lot of times when it crosses that and breaks over that little pullback is a potential entry point. But you know, the momentum hadn't crossed over until back up over here. So you know, sometimes you enter a bit later if you're waiting for certain signals, but this is an index of the US dollar compared to a basket of other currencies. And so that's one aspect. If you want to get one, I'll just type it in here. Dollar, which is US Canada. It's a US Canada exchange rate. You know, you can see it's going quite strongly up, but that's just the US Canada one. But the UUP is a US dollar index. And then TBF, if you want to talk about, these are long-term yields, 20-year bond yields. This will go up when the yield goes up. So instead of buying TLT, like which is the bond fund, this is going down. So bonds, the bond itself, the price of the bond is going down. So you don't want to be getting that one. Some people buy it and lock in an interest rate, but I'm talking about like holding for trading for capital appreciation. So TBF will go up when the interest rates are going up. So I got into this one. And you know, I put an arrow sometimes where I would want to get in if I didn't, or even if I got out when it turned red, and then you see a breakdown. Now, one thing you can do with these volatility stops is you don't have to sell when it goes red, but you could wait for like a significant close below this 8 EMA. So you can see how we get a little bit below the 8 EMA, and this stayed green, but this one here went red. So you could get out here and rebuy in, you know, that's fine. But if you're patient, you could draw a trend line. You could wait a bit for the pullback and see how far we get, especially when the momentum is still above the moving average. So let's go over to the leveraged ones. And there's some really insane gains and losses here with various ETFs, but oil and gas has been going down because of recession. So you have DRIP, which is a 2x bear. You know, obviously you can look back and see where you should have gotten in and keep that in mind for future reference when you have crossovers, when you switch from red to green volatility stop. But you want to see an uptrend. Like here it turned green, but you still didn't cross over down here on the momentum. So, or you could wait till it gets above the 50. So like I said, it usually goes up above the 50, pulls back, and once you get support at the 50. So, but if you're jumping in earlier and you have an uptrending momentum, those are the entry points. You have gold inverse. Gold's been doing well. Like inverse of gold is recently pulling up again. Semiconductors, like, so this is where you can really get into Asia market, China bear. There's small cap bear, there's tech. You've got NASDAQ, which is a triple, I believe, ultra pro short. So the gains are going to be a lot bigger and the losses. PIL is a medical bull. There's bulls and bears in here. It's not just bears, but there's a oil short, ultra short. Natural gas in Canada, HND, inverse leverage. So this is just going to be getting above the 50 here. So this one, you know, it's up 12%. So you can really get up and down a lot. If I scroll down to the bottom, let's say, you're going to see gold going down 6%. This is actually real time in the morning. So that's a nice thing with TC2000. You can see real time prices. Brazil, these are all down today. Energy, the bulls, 2x bulls. So similarly, if you're looking at the bull market and you're seeing this breakdown below the 80 EMA, red volatility stops. Now we've got a breakdown below the 200. Now sometimes it comes right back up above the 200, but you know, you want to get in sooner when you had this little start right at the 80 EMA and then you have it down. You could get in sooner there with the downward momentum. But you know, we're still going down. You can see what happens here. We get these really gap downs here, and then it sort of flattens out. So this could just be starting. It could be going down a lot more. So you'll have to decide if you want to do it. But the leverage ones obviously are more risky in that sense. These are banks, regional banks, inverse. This is a 3X as well. What else is there? I've talked about, real estate. That's a bull. Obviously, you don't want to get that one. Retail, utilities. Some of these are bull cases. Nail is a bull 3X. You don't want to be getting into that. There's some Canadian ones as well. AGD and so I think that's all I want to talk about today. One quick thing. I'll just show you. I have a watch list with my stocks. This can change from day to day, so don't really follow this. What I'm doing here. The Toronto ones, the Canadian ones aren't real time because I just have US real time data. So those ones are from yesterday, but these other ones are up because the pre-market is down. So that's a NASDAQ. SJB is a short-term high yield. And so the short-term rates were going up more than the longer-term rates. So you can see it's up again today, 1% as of 8 o'clock Eastern time. TBF was the one I talked about. It's the Treasury 20-year. But the one that's not doing too good is silver right now. It's still green volatility stuff, but you can see we have this down candle and it's starting to curl down. I kind of jumped the gun here because if I turn on the well, let's put it this way. We had this little pullback and then a bump up with an upward momentum. So I got in before the moving average was kind of crossing. Obviously you can cross here and then pull back down again. But we have this resistance right up here. So I thought I had a bit of a gap here. But if you draw a line on an angle, like a declining trend, say like this, you can see that we had to hit it here and we've hit it here. So you could have decided to wait until you got above that downward trend line. But we'll see what happens today. It's going back up again a little bit in the pre-market. So you want to wait ideally till later in the day, at the end of the day to make a decision, because sometimes things can reverse quite a bit. But this one here might not work out. Silver was kind of perking up here and I got into that one, but they don't all work. You're not going to have 100%. I'm not saying this won't work, but you're not going to have 100%. So don't try to be perfect and just play the probabilities. And so you can see the majority of trades should work, or at least more than 50%. And if you do your risk management, then you can deal with that and be successful that way. Okay, well, we'll talk to you guys in the next video.